welcome back. Markets looking in pretty weak, but listings continue, and one such listing today is Shriram Properties. The management is now with us. Mr. Murli M as well as Gopalakrishnan J is with us. Murli, let's start first with you. Congrats on the listing on the exchanges. What's next for this real estate company's ambitions?
We are focused on mid-market and affordable housing, and we believe there is a great growth potential for this business. And this is there is ever-growing demand for particularly on mid-market and affordable housing. As you know that post-RERA, the industry consolidation is helping only large branded players to grow well. So we are one of the top 3 real estate developers in the markets where we operate, and we believe there is a huge potential for us to scale up. As an organization, we built a capacity for about 5 to 6 million square feet, and we have done last 3 years about 3 to 3.5 million square feet. I see a great potential in the next 3 years for the organization to grow much bigger. Because of the industry contour, which is helping us to consolidate in the consolidation market position, it's going to help us a lot.
Good afternoon, gentlemen. This is Cheryl also joining in the conversation. Let me talk about the fund usage that you've got via the IPO. How do you plan to use the proceeds that you've actually garnered through the fresh issue of the IPO?
As you know, we did a 600 crore IPO, 350 crore off of a sale by proportionately by each of our 4 private equity investors. They continue to hold more than 35% in the company post-listing, and so we have immensely benefited from their support and guidance in building this company so far, and we believe they will continue to be a guiding force. They'll be part of our journey, and we are happy to welcome new set of investors, 4.7 lakh retail and non-institutional investors, apart from marquee global and domestic institutional names. All of this gives us encouragement to keep doing what we have done so far over the last couple of years and try to scale up and grow more profitably going forward. From the perspective of what we would utilize this money for, as you know, OFS is by 4 investors, and the primary proceeds 250 crores. We'll use it mostly for debt reduction, make the balance sheet lean and low cost, and therefore we can embark on the next leg of growth, and when needed we can re-lever the balance sheet for growth funding. From the opportunity perspective, as Murli pointed out, I think the market is very large. Staying focused on mid-market affordable itself is good enough to feed growth for us, and therefore we are confident of continuing our exciting journey that we have had. As Murli said a few minutes ago in his speech at the listing, we have grown at about over 45% CAGR. We see a huge market potential, and therefore that should keep us going over the next several years, and therefore we see entering into a new growth trajectory in our post-listing life, and we're very confident about growth post-listing as well.
Murli, let me again come to you. What is the usage of land versus joint development, JV model going ahead? How do you plan to reduce the capex?
I'll address the strategy part. I will leave Gopal to talk about the other question. Strategy part, right from the day one, Shriram Properties focused on asset-light model, and in fact we have been a pioneer in this. Right from the day inception, we focused only on asset-light model, JDA, JVs. The new model which has come in the recent past is the development management model. We have specialized in that. We never done any land banking business. Only one land parcel we have in our entire portfolio of close to 50 million square feet, and whatever we have developed so far, we never focused on land banking. We believe in this real estate space in India today, you cannot use short-term borrowing to create long-term asset. Hence, right from the day of inception, we have been practicing asset-light model, and development management model has been working very well. 3.5 years ago, we started this development management model. Today, 1/3 of our portfolio in this development management model. This is completely asset light model, and we believe this has a tremendous potential for growth in the next 5 to 7 years time. Our focus will remain on complete asset light model.
Mr. Gopalakrishnan, let me come to you with this question. What is the debt levels currently? Also talk to us about the leverage ratios that you are comfortable with going forward.
On the debt level, you asked, our current net debt is about 700 crores. Post use of primary proceeds for repayment, we would drop to about 500 crores of net debt. Currently 0.7:1, will drop to about 0.5:1. By end of the year, it will drop further with operating cash flows coming in, and same is the case over the next couple of years. We are very comfortable at a debt level of 0.5 or less, but our endeavor would be to keep a light balance sheet with a very low gearing. As you know, we have always been one of the lowest gearing levels in the in the sector. We'll continue to strive towards that, being in the lower end of the debt equity ratio.
That was, of course, the new listing. Thank you so much, gentlemen, for taking out time for us, and congratulations. It's an important day for you, whatever may happen.